guys, it's your girl Alexandria B with Wall Street Been Black. And today, I don't feel very well, so our watch list is going to be straight to the point, straight to it. Let's pull up SPY and QQQ first. We'll get into the sector ETFs and then the 5 tickers that I am watching to enter into some swing trades. First thing I want to say though is I did put out a mass message across all my platforms. If you are swing trading, your expiration date needs to be either March, because 2025, and that is a shorter term swing, or June 2025 for a longer, intermediate, more whole swing. The reason for this is because we have 3 weeks left in the 2024 fiscal year. We have about a month left until the inauguration, which means we have about a month left until the first 100 days of a new presidency, where we will see policy shift, money exchange hands and shift sectors, et cetera, as well as we are about a month away from the Q4 earnings report season. All right. There's a lot of volatility that's going to happen in the market. You need to buy some time to save your behind. Right. So when we're looking at SPY, listen, I see this push-up is just absolutely fascinating to me. It's fascinating to me. The range of these candles are decreasing. I need to make sure that y'all see that y'all understand that. The range of these candles are decreasing. So what does the range of a candle mean, and why am I bringing it up? I believe, me personally, that there are 2 definitions that you must know when it comes to understanding and analyzing price action, and that is the range and the change of a candlestick. The range is simply telling you the distance from one end to the other. So on a candlestick, it's going to tell me the distance between the highest point and the lowest point. So let's say here for this bullish candle that the high was $20 and the low was $5. That makes the range of this 15. The low was $5. It pushed all the way to a high of $20 at one point. That gives us a $15 range on this candle. All right. Now, if I see that this candle has a $15 range, it's a bullish candle. The next bullish candle has a $22 range. I can feel confident to stay in that trade. The bullish momentum is there. If that next candle's range is $30, I definitely feel confident to stay in that trade. If the 4th bullish candle's range is now $12, that's a really good indication that the bullish momentum is starting to wane. Perhaps I should be looking out for a reversal coming soon. Now, when we talk about the change of a candle, that's simply telling me the difference between the close of one candle and the close of the next. So a positive change in bullish price action means that it closed the next candle closed higher, right? If the next candle closed lower with bullish candles, that was a negative change in price action. An inside candle? Yeah, that's not really a bullish candlestick setup right there, my babes. Now that we're back over here looking at SPY with those definition of the range and the change in our mind now, we can see that the range of the last 3 weeks has decreased while the volume was also decreasing. And then last week, we can see that we had a negative change in price action. For the last 3 weeks, we've closed higher, right? Last week, we ended up closing lower. There's actually a tweezer top pattern, which is bearish. Lots of things in here are telling me, perhaps we can see a little bit of a pullback coming. Something else that absolutely fascinates me is that right now, listen, we have 15 days left in this monthly candle. And we know there's going to be a lot of vacations in there. This is December's monthly candle, right? Or this is the monthly candle for December. There's going to be about 3 more days that the market is closed this month. Let's see what happens these next 2 weeks, right? Right now, we're seeing a shooting star at the top of an uptrend. Fascinating to me, right? So back down on the weekly, it is going to be the 600, which is the line in the sand to me. Is we need to be watching for if price will hold this 602.50. If it loses that 602.50, then I'd expect to see 600. And then that's where it's like, all right, are we going to lose 600? or we're going to hold 600 and then push back to the 60 into this 60 or 610, possibly even up into 615 new highs range. We'll see what happens. Below the 600, I would then look to target the 595 area. All right, we look at QQQ. Looks totally different, right? Tech took off. Tech had a decreased range, but a positive change. All right. Because the previous week, the range was we're going to go from 510 lows to 526 highs. So about a $16 range. Whereas last week we had lows of 519 to highs of 533, which is about a $14 range. You know. Okay. But this was a Moo candle, Marubozu candle. That volume did come in higher. Let's look on the daily and extend this trend line out. It is in here the 515 that has not been retested. All right. But I would first look to make sure that QQQ will be able to hold 520 as support. We do need a nice pullback on the daily. We even see where we had this doji, which is at the top of an uptrend, which is just a beautiful price action signal for a possible reversal. So I'm overall, I'm looking for price to reverse back down, and let's see if we hold these touches of support once we do get down there. All right, now let's check out our sector ETFs. Starting off with consumer staples, and we'll go to the weekly. Listen, the breakaway gap, we did not have the continuation gap, and we did not end up having the exhaustion gap, right? So we can go ahead and delete this. That did not play out, but it is holding this gap. It is still holding this gap from the November 25th, the week of the November 25th, where we saw that we pushed back and held it as support. I mean, just beautifully closing right there on it. Beautiful, beautiful. Absolutely beautiful that we're not seeing price close inside of here. I love this. So I will be looking to see if consumer staples holds this range and makes its way back above 82.52. That would make me feel great. Or if we do end up just going ahead and closing below this gap, so about below 81.83. All right, I'm expecting us to go ahead and push down towards the 80 level, find some support there. So that gives me a great indication of what I am possibly seeing for consumer staples to the downside. However, if I look at this, you're looking kind of bull flaggy to me. You're looking kind of bull flaggish. And I love it. And I love it. All right. We got this uptrend where we broke out of here. Now we have where we see prices making the lower highs and lower lows in a parallel channel, which would make it a flag. So again, I'm looking to see at the consumer staples sector break over this 82.52, which will have me automatically looking at Procter and Gamble for a beautiful break and retest, as well as Costco for a beautiful break and retest into that 1,000 range. But we'll get there. The basic materials. Ciao. Back to the weekly, right? You didn't hold nothing. You didn't hold nothing. Fascinating. Ended up giving us an evening star, which played out. Fascinating. So we're going to move that to the bottom. We're not worried about it. The utility sector. Again, we got us an evening star. I'm not worried about it. I would expect to see this push down towards the 75 range. Communication sector. It's just been strong. It has just been strong. Listen. And Netflix is pushing it. I haven't even checked out Disney. Let's look at Disney really quick. Ooh. Ah. Fascinating. We got a lower high. And let's go back to the communication services. For this, just because it has broke in the last 3-4 weeks, honestly, it just keeps making these new highs. I need to see a retest before I continue to play this sector to the upside. The industrial sector. Boy, did we get it. We got that drop. We got that drop. this daily gap and came back below it, and beautiful. I would still expect to see this hit the trend line around the 136, 135 to 136 range. Which I don't like to play the inverse move on the industrial sector. I like to wait for it to get to a touch of support and then play it off of it holding the support trend line or losing this support trend line. This would have been beautiful if you caught it breaking back below this level, the 142.64. But in the meantime, in between time, you're just hanging out in thin air. Let me see you get to this trend line. The energy sector, my goodness. If that thing didn't just drop and give it to us. Dropping give it to us. If it would have crossed over, we could have done it. But look at this tweezer top. Same thing that we just were looking at on SPY, right? See those two candles there? Now if we come back to the energy sector, see those two tweezer tops there and how the resulting factor, all right? We got the trend line break and we're back here to this range. Look to see if we hold. I'm going to look to see if the energy sector can hold 87.54. If it does not hold 87.54, I'd probably look to go ahead and trade it down towards the 84. And I wouldn't be mad about that. Technology sector, you know, we just looked at QQQ. You'll know what I'm expecting. But I do see something fascinating with the semiconductors, so I'll pull those up and show y'all. I do want to point out the fact that this is a rising wedge on the daily time frame, which is a bearish chart pattern. I'm going to point that out. The technology sector is wedging out. All right. The financial sector, with this pullback, I was expecting to see it pull back to a touch of support because typically the financial sector does really, really well in January because Q4 is a great time for loans. It's a great time for the financial sector, for them banks, okay? So in January, when they're reporting Q4 earnings reports, typically the sector is bullish, all right? So I do expect to see this. Something I want to point out here is look at this volume, right? Look how the range of the candles decreased and the volume decreased. And then look at this bullish sentiment that we had coming in. All right. So absolutely love it. Wish I would have caught this drop. I was on vacation last week, but beautiful, beautiful, beautiful. And then the last one we'll look at is going to be the consumer discretionary. And for this, I'm going to go to the monthly. And I'm just going to say, whoa, what a strong month. Okay. At this point, the best that you can do is to mark off the open of the consumer discretionary. So this is where we're going to see the Tesla, Amazon, et cetera, all that, right? So with that being said, this range in here is what we would love to see a pullback somewhere in there. All right. We come down to the weekly, and you can also keep watch of the range of the previous week to give you an indication of, hey, is the pullback starting? So by that, I mean, we want to look at not the last week that we can look at, but the one before that, we want to go ahead and mark off the range for there. So the high of this was 232.85. We'll just say 233. All right, cool. I'm going to be very suspicious if you cross back below 233. I will say to 232.85. I'll be very suspicious. I'll start to think, okay, we're getting some downside movements, right? We must be about to retest this 223.84 range in there. Right, so now let's go ahead and check out the tickers that I am watching going into next week. First up is FedEx. Listen, if that sucker didn't give it to us with this reject off of the 308 here at this trend line, the resistance trend line, heading on down, right? My expectations would have been, if this lost to 272, that we were going to indeed hit the bottom of this demand zone and the support trend line that we have followed since October 2023. Hit it again January 2024, July 2024, September 2024. Perhaps we would have hit it again in December 24, January 25. Last week's price action signal. You see how right over here, price got right here, and then we had this small bullish candle, whatever you want to call it, a spinning top, whatnot, and we had a retracement back up. Seems to be what that's giving us here. Now, what I really want y'all to keep in mind, you cannot buy an expiration date within 30 days if you choose to swing trade this. Why? All of the reasons I told you at the beginning, all the volatile activities that we have coming up. Also, they report earnings this Thursday. They report earnings this Thursday. I would love to see it go ahead and drop down towards the 272, 273 range, hold that as support, and then push back up. Other than that, based off of the fundamentals, FedEx is going to do very well. I would love to see it hit a touch of support first, or I will buy plenty of time, get a leap here back towards the 310. All right. Now, if you wanted to day trade this or do like some weekly swings, which I do not suggest doing because again, they have earnings. All right. You're looking for a loss of the 277 range. And honestly, just go ahead and say this 272 since it's just hovering right there, right? We hovering right there where we're already looking. Below the 272, targeting the 265. But if we do break above where we had this gap here from the week of the election week, right? Above 286, that's a beautiful entry to trade it back to the resistance trend lines and into the 300, 310 range. Riot, they ready for this. They ready for this. And look at this volume. Look at this huge volume spike that came in last week. They ready for this. They buying it up. They have consolidated it here for 1, 2, 3, 4, 5, 6 weeks. Absolutely have they consolidated this for 6 weeks. The safest thing to do, as y'all can see, I have my trend line. I got my alert set on the trend line. All right. The safest thing that you can do is wait for Riot to break above the weekly resistance trend line. And I am currently watching the 20 call, June 2025. That is what I'm looking for. I want to know when it crosses above there on the hourly. All right. When it closes above this trend line on the hourly, my alert will trigger and I'll feel confident to go ahead and look to enter into that 20 call for June 2025. If you can buy further out, that's even more beautiful. All right. Now here on the hourly, look at this. Look at that. Look at that. Where we see that the selling volume decreased on Friday. And you come on in here at the end of the day on Friday with higher bullish volume, right on the trend line. I love this. Riot is ready. I'll keep y'all's eye on that one. Next up, I have SoFi. With SoFi has been here to aggravate me. All right. We do have this bullish flag, right? We broke out of the resistance trend line. I'm going to go ahead and go down to the 1 hour where we broke this resistance trend line and it did break and retest it. We retested. You coming on up. But at this point, I need you to break 1665 so I feel good. So I feel good about it. Break that so I feel great about it. Now for this, we did enter in the Discord into March. Following. Absolutely beautiful. Let's see. We got into Boeing at 153. I'll show y'all what it looks like now. Okay. There we go. Yes, the March 2025, the SoFi 20 call. I think this is still relevant. This is still good. If you can by June, just buy some more time. All right, buy some more time. But let's check out Boeing while I got sidetracked on that side quest. SoFi, I don't have any advice for trading to the downside. The momentum is to the up. We look here at Boeing. Let's go, Boeing. Now, Boeing is the type of stock that you have to look at on the weekly. Anything under the weekly, honestly, it's the type of stock you gotta look at on the monthly. It ain't got nothing. I can only look at Boeing on the monthly. That's it. That's all. And look at this. I mean, it's just beautiful. Going right into our, I mean, just absolutely beautiful. And we bought plenty of time with that one. All right. So now I want to check out Target. And let's go to the weekly. Target fascinates me here. All right. Now, of course, because consumer staples is fascinating me, rewind a little bit if you forgot what XLP, consumer staples ETF, looks like right now. But this hold off of this resistance or support trend line that we have here moving up. We had 2 weeks of inside bars and then it pushed the twins out right here, right? Now, I want you to pay attention to where price closed last week. Look to the left. Fascinating, right? This 134.50 range is integral. Absolutely fascinating. Fascinating. So now what I'm looking at is here while I'm on the weekly is I put a level at the high of the weekly candle of August 12th, which is about 144. And then we're also looking at this huge drop down that we had, which was due to an earnings report here at 152. So this is the range as far as swing trading that I am watching for. So safety is if you just take the high of last week, which was 138. If target crosses 138 to play into 144, if it continues to move above 144 into the 153. All right, it's beautiful. Google, I really just wanted to show like, you know. This really is, I really do love either or setups. It was either going to continue to lose the 163, right? Or it was going to retrace the trend line and break back above the trend line. And then, hey, I was looking to trade it into the 181, but we see what happened that day. Yeah, just gapped on up over it. So this was beautiful. And then to reject here to make a new high. That was a new high, my babes. At the end of a fiscal year. That's crazy. You made a new high because until this Wednesday, last Wednesday, December 11th, all-time high close was 191.18. Last Wednesday, we got that close at 195.40. So fascinating to me, and we're starting to see that retrace now, and it retraced below the resistance level here already. This 192.18 where these highs were. We're already below that. So at this point, I'm expecting to see a retracement back down to the 181. That would make me feel best. All right. Now I am also paying attention to this old wiki right here. So maybe about that 186.40. Losing that down into the 181, 182 range, and et cetera, et cetera. If we hold any of these levels to play right back up into the 195 range, and I wouldn't be surprised if we ended up seeing 200. SOXL, the semiconductors. Now, SOXL looks fascinating to me simply because of this volume. Now, this was an old one we were looking at with all of that, but simply because of this volume spike as well, right? Right here on this trend line. When price is like just consolidating inside of trend lines, I don't mind. 9 times out of 10, we just probably gonna see it go ahead and gap above the 32.75, right? 9 times out of 10 overnight. But I don't like to overdo myself on the whole, what am I watching? What am I trying to say? I don't like to overdo myself on how many stocks that I'm in where I'm like just waiting for the consolidation to be over. I'm already in Mara and Riot and SoFi. That's enough. I'll let SOXL do its thing. So here on the hourly, when I drop down so we can really see, we did get this break, right? It's like, okay, are we retesting? What are we seeing here on the 1 hour right here at the end? So on the 4, you look good. You look good. All right. You look good. I would like to hold off a little bit and let's see if this does retrace back down towards this trend line around 30, which is also where my 9 moving average is here on the 1 hour. I'd like to see a little bit more retracement. Now, if this just breaks the highs of last week, we go ahead and break above this 31.50, and then, hey, into the 32.76, which is a beautiful profit. That would be a beautiful, possibly even day trade on the SOXL there, but I'll hold above the 32.76, and I'm definitely looking to trade that sucker back towards the 41 range. All right, which brings me to AMD. On AMD, I'm just going to come straight to the monthly. I'm going to come straight to the monthly time frame. And we have a low here from the August 2024, which is at 121.83. And AMD is currently at 126. All right. I am expecting to see AMD continue to drop down towards this 121, 122 range and then hold here as it usually does, because this is typically a launch pad for AMD off of the 121. Historically, this is a launch pad, whether it was launching it on down back to the 93 until it bull flagged, right? We see this bull flag, then broke there and we got that push all the way to 227, which never returned. I'll never forget that. However, we see historically, right? It's a launch pass, and historically, once, twice, you getting these big moves off of this 121. So this is what I'm looking forward to seeing as well. Now, if we get a weekly close above, I'm going to need to see a weekly close below 121 before I would enter into any swing trades, because it's a swing trade watch list. To the downside, I need to see a weekly close, and then I'd be targeting 95. Overall, I'm expecting to see us hold this 121, 122, and to my first overall target buying a June expiration date would be 158. And those are the ones that I want to show y'all for the watch list. Make sure that y'all go back and check last week's watch list, because the financial sector, did what we thought, pushed back down, retracing back down. So the financial sector is something I'm also watching to see, will we continue to push down or will this hold? Because like we said, we already know we expect for January to be a bullish month for this financial sector. So I don't too much want to trade it down, but want to be aware of where it finds some support at so that I can enter at the bottom and trade that sucker on back up, as well as some follow throughs on Nike and Tesla, as well as Meta breaking this bull flag. All right, make sure y'all check last week's watch list for that, for your updates, and follow it through. I'll see y'all at the top, fam. Bye.